G'day and welcome to Motley Fool's What I've Been Reading video series on YouTube. I'm Scott Phillips, the Motley Fool's Chief Investment Officer, and in this space, we talk to some of the Motley Fool team about things they've been reading. Why? Well, they're voracious readers. They like to read, they like to learn, and we figure you probably do too. If you're watching this right now, there's a very good chance you actually value learning yourself and reading in particular. Now, whether it's a book, whether it's a pamphlet, whether it's a newsletter, it could be a research paper, basically we're just trying to kind of take you inside the work that we're doing, the thoughts we've had, and the way you can think about investing from that perspective. And hey, if you end up with something to read, something to listen to, something to enjoy, that's great too. Speaking of which, I reckon the most voracious reader at the Motley Fool has to be the Motley Fool's Director of Research, Ryan Newman. Ryan, g'day.
G'day, Scott. Thanks for having me. Great to be here.
Mate, we don't work in the same location, but I dare say you have your nose in a book more than almost anybody I know. You are very widely read. You're a voracious reader, as they say. And I always love the writing that you do, by the way. And quick plug, not intended. But if you're a Motley Fool member, inside the Members Centre, Ryan writes a heap of good stuff. Not all the time, but semi-regularly, and often based on books he's reading. So very worth, if you're a Motley Fool member, please do go to the Member Centre. There's great stuff there from everybody, but Ryan's, not book reviews, they're just, hey, here's a thing about investing I learned from this book, which I think is awesome. Mate, speaking of which, you're going to talk to us about a book called, glasses because I'm old, Reasons to Pass, A Guide to Making Fewer and Better Investments by Ralph Birchmeier. Now, I love the title and I love the idea of fewer and better investments. I know you do too. So I guess I'm just going to throw the floor open. So tell me about the book. What is it about? What did you learn?
Scott, Reasons to Pass. That's one really good name. Another really good name that the book could have been called, I think, is The Subtle Pull of Maybe. And I'll get to that in a moment. I tried to actually mention that in the book. Yeah, it is a really good line. But anyway, Ralph Birchmeier, he was a CPA, so certified practicing accountant. He went on to become a CFA charter holder. And also worked as a global equity analyst and also, I guess, an investment committee member. So this guy's really used to saying no and really scrutinizing investments, which I think is really important. And really, I suppose, getting to the focus of the book, saying no. And it's a really important lesson. I think a lot of us aren't very well practiced at saying no, especially in our personal lives, especially to the ones we love, to friends, family, but also to investments. And speaking specifically, I suppose, about the ASX, there's about 2,300-ish businesses on the ASX at my last count. And typically we try to own between 20 and 30. I think our official advice to members is between 20 and 30 investments. I typically try to aim for the 20 to 25 mark. I like to be a little bit more concentrated, but around that mark. Mathematically, though, that means we need to say no to about 99% of the investments on the market. It's a lot of no. And I suppose, really getting to the message of the book itself was, it reminds us that the discipline and not optimism is often the foundation of a great investing. And I suppose where I pulled that other line from, the subtle pull of maybe, really, there's a lot more than 30 quality businesses on the ASX, but many businesses are close to investable. We're sort of looking at that, the fine line between, is it investable? Should it be part of my portfolio or shouldn't it? And I suppose in that sense, the idea could work. The founder might execute, the market might be ready for this latest technology, but really the book warns us that maybes are often, I suppose, the enemy of long-term performance. And it's also emotionally harder to pass on those interesting businesses, the ones that sort of catch our fancy, than the obviously bad ones, but also a critical lesson.
It's fear and greed, right? I mean, everyone wants to catch the next big thing, the next Amazon, the next whatever. And you kind of look at it and think, well, maybe it might be okay. And if it is, then maybe I want a part of that. I don't want to be the bloke who said no and walked away from it and said, no, it's all too hard, or I'm not sure, so I'm not going to do it. There's a real temptation. On one hand, if you're someone who is a pessimist, everything looks like a problem. If you're an optimist, as you say, everything looks like maybe, as you say, that's the right word. And yet that's what we have to do as investors. You mentioned 99% of the ASX is a no. Then make that global. I mean, and then turn to dollars, right? The ASX is 2% of the world's markets, and you pick some companies from that, there'll be 1% of those, 1% of the 2% of the world's markets. I mean, it gets really small real fast. And yet that is the work that we have to do to concentrate and try and work out what the right approach to take is and how to think about constructing that portfolio. You and I know, mate, you run Motley Fool North Star or Motley Fool Pro. I run a couple of services as well. When we work with our teams, I'm saying no to my team a lot. And I'm really mindful of that because it's one of those things you feel like, the whack-a-mole thing. They say, what about this? You go, no. This one, no. But it's because of that reason, right? Because you have to really, really drill down on that conviction and make sure you're picking the right ideas. What does the book tell us about the process of getting to know? Is it a book on the psychology of it? Does he outline some investment approaches? How should we think about how to decide when and where to say no?
Look, I suppose the first thing to note as well is that Ralph was really coming from, I suppose, a US side of things. So the market there is a lot bigger. I think they have maybe 8,000 or so companies listed on the stock market. So it is a lot easier to say no. I suppose, though, this book, one of the main takeaways, and I think this is a really key one for investors, is that complexity doesn't equal opportunity. I think a lot of us, particularly when we're investing, we like to think we're smart. We like to think that we know more than the market, or we know more than our neighbor. But ultimately, if you don't understand a business or what it does, exactly how it makes money and exactly where it's going in the future, then it's probably not uh, it's probably not really suitable to be part of your portfolio.
Mm.
Now, we're not going to get it right every time. Yeah, even the best investors in the world, the Warren Buffetts of the world, the Peter Lynch's, they will always get it wrong just as we will. So I think that's a really important point to make. But really, the opportunities that investors should be focusing on are the ones that sit inside their wheelhouse, their circle of confidence, competence, if you will, that they can actually understand what they own. I think a couple of the other things though as well are, there are businesses that are potentially on the cusp of investability. So, for instance, maybe that you and I were talking just off air about board meetings. Maybe there's some corporate governance issues that are potentially looking a little bit shady that you're just like, oh, I don't know if that's going to work out for me or not. Just say no. You don't have to say yes. You don't have to, fill up that investment portfolio as quickly as possible. I suppose investing in any business, it creates an opportunity cost that you can't invest in another business because capital is finite. So really, you want to be sure about the businesses that you're putting into your portfolio.
Nice. Mate, when you think about reasons to say no, or was it the subtle pull of maybe? I love that. What advice could you give our general advice? Obviously, if we don't give personal advice, what advice could you give our viewers as to how to put that to work in their portfolios? Are there specific things, specific ways, specific ideas? Are there tools you yourself use or maybe learned from reading this book?
Look, it hasn't actually mentioned this strategy, but one of the things that I really like to do is occasionally go through an A to Z process. And I know that Warren Buffett has spoken about this in the past as well, which is literally going through the market, the ASX in this case, from A to Z, literally A to Z from the company names. Now, as I said, 2,300 businesses. Most people don't have the time to do that, nor the patience to do it, and neither do I. I have to admit. So what I do is I generally run like a screen. I get rid of the companies that I know stand no chance of making it to my portfolio. So these typically include companies, I suppose, with less than say $4 or $5 million of revenue, of annualized revenue. Companies that might be less than $100 million of market cap. I don't really tend to invest in speculative miners or biotech companies. So I sort of filter all of those businesses out, and then what I'm left with, I try to go through an A to Z process. Now, going through that process, with the filters that I just mentioned, I'm probably left with 7, 8, 900 companies worth. From there, I can continue to go through what are the business descriptions, what do they do, what do I like about each of these businesses, and I can start to really filter those down. Okay, this is a maybe. I'm going to put that in the side for now. This is too hard. I don't quite understand what they do. I'm going to put that to the side for now as well. So I think for investors, it's really about widening that lens of opportunity, widening what you could potentially see yourself investing in, and then trying to narrow it down from there.
I love that. The idea of saying no a lot, but also starting with a really big pool of things to say no to. It's kind of how we
Yeah,
get there, right? I'm turning over those rocks and waiting. No, 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 no. Eventually, all of a sudden, you find a yes, and the process pays for itself. And you got to keep those two ideas in your head at the same time. Say no a lot. In other words, have a small portfolio, but pick from a large pool because you don't want to miss those opportunities. You want to find the yeses rather than be stuck with a few maybes that end up being yeses because you've got no other options.
I think as well, one of the things that a lot of investors need to come to terms with is that passing isn't failure. And I think some of us can spend weeks looking at a company, and
Yeah.
it's incredibly painful to then turn around and say, no, it's not quite good enough. It's not.
Yep.
I'm not going to invest in this. I think once you get to that stage, it's very difficult to say no. So I think what you really also want to try and do is figure out exactly what it is you like in a business. What is it that makes you automatically attracted to a business? And what is it that really gives you the irk? You know, I don't like that in a business. If you can try to say no to a company early, that is really, really advantageous and allows you to really focus on the companies that you do like or do stand a better chance of making it into your portfolio.
And that is a wonderful sentiment on which to leave this episode of What I've Been Reading. Ryan, thank you for sharing your expertise and your reading insights. Folks, thanks for watching. Thanks for being part of this. If you have any books or recommendations you want us to cover, things we may not have read, now we're only going to do one of these about a week or so. We've got lots of stuff. The guys have already read a heap of things. But if there's something you want us to cover, please let us know. Feedback is always welcome. As always, please make sure if you're enjoying this, if you got to this point in the video, you appreciate Ryan's insights, you want more of them, of course you do. Hit the like button for this video if you wouldn't mind. It's good for my ego, good for Ryan, but also helps other people find the videos. For you, more importantly, hit the subscribe button below and the alert bell. What it means is next time we send something out, YouTube will let you know it's there. And that's the best way to keep in touch with what we're publishing. We're publishing 2 or 3 things a week on YouTube. There's 3 episodes a week on our podcast. Lots of great stuff for free, by the way. Make sure you check that out on the podcast and, of course, here on YouTube. Until we speak again, thanks for watching and full on.
A lot.